All right, we good to go. All right, peace and blessings, everybody. This is the Sauce Factory Wednesdays. Okay, technical analysis class with the cheat code Aldo. All right, today we're gonna be going over sideways markets, how to navigate sideways markets, how not to get chopped up and finessed, tricked off the streets when it come down to these charts. Very simple thing to do. First rule of trading sideways markets: don't trade them. It's straight up. All right. But since that's out the way and we know people don't still want to get their trades in, we're gonna have to make it do what it do, right? All right. So first thing I like to do is start my technicals off on a weekly chart. If I'm gonna be day trading or simple swing trades, even scalps, I definitely want to go to the weekly chart and recognize what is going on, right? So when I come to the market, first thing I'm gonna do is I'm gonna highlight the previous week candle. I'm gonna highlight the high and the low of the previous week candle. Just trying to capture price real quick to see what kind of zone we're working in. So I got my templates made up, and then when a week high, week low, right? Boom, boom. Typically, I set alerts on these trend lines here. It's by you know hitting that little button right there. Then you set your alert whatever way you want to do it, but the week already hit. So, and I'm gonna look this right here. If you would have done it on the previous week, this how you can get simple ideas of which way the market is going, right? This was the previous week candle. Just by simply putting two lines on a weekly chart, you'll see like, hey, we making bullish progress. Great. Or are we not making progress? Because you look at the previous week, you can say, hey, about 4 weeks ago, right? Price barely got out, but it still closed on the inside. So that was a sideways week. It was a lot of backwards and forward with the bulls and the bears, right? So you pay attention to that. That's the fastest way to recognize what the market is doing. Today is Wednesday, so we mid through the week and we are still inside of the previous week candle. We haven't taken the high or low yet, so that means we haven't made no progress. So from there, we're gonna drop down to a daily chart, see what's going on, see what we have. We got a gap down here that need to be rebalanced. That is from the Avinia earnings play. That's what sent the market into a frenzy. So we're gonna just highlight the simple technicals and say if then what, right? Because we know they start heading downwards, we know they're gonna try to come fill this gap, and that'll be on the table. If not, they don't try to go fill that, then we say, hey, they're gonna be running highs. But since they did not take highs, which would be market liquidity, then we know for sure they're not gonna do that. But for them to actually run highs, they're gonna have to come back, rebalance price on the low side, grab some market liquidity, then run up. Until then, they'll probably do a false little breakout, Judas swing, and then come back down and try to run these gaps. So I want to look at the charts, look at the size of the candles. Like, okay, we had a little down pressure. Now we found a base here inside of this candle, and we are going sideways. So we're going to drop down to the 1 hour chart. You want to put this when you pull out your oscillators, right? This is the importance of oscillators. When you see the MACD very skinny like this, right? You see the squeeze, the swing, everything is very skinny. This is consolidation. So when it's happening, that is low momentum. When you have low momentum in the market, you do not want to trade that because your contract is going to go sideways and the data going to eat you up. In a futures market, you can trade these type scenario. You can trade this scenario in a futures market, but you want to have short profit targets on short lower time frames. We'll go over that in a second, right? But for the moment, we're on the spot. So when you're seeing this is Friday price action, currently Tuesday price action, and we're at Wednesday price action. The fastest way to determine what's going on, it's almost the same concept we did on the weekly chart, but we want to do this on the 1 hour, right? So to make this easy, I'm gonna come back into my settings, go to session break so I can divide up which days of the week it is, right? Then boom. So what I want to do is highlight the last swing low, boom, last swing high. So this is yesterday low, yesterday high, right? And we are currently in the downtrend. So technically that is a lower low, right? And this is a lower high. So from here, this is your range. You want to make sure you highlight the previous day high and low so you can keep tracking price. If you seen them bounce right here, They stopped. They did not run highs. So technically, this is a downtrend. They just did not retest yet. So this is bad business, right? So we are currently tightening up the trend here. Still determining momentum left out days ago. All the oscillators are in the bullish territory. My MACD and my swing is in bullish territory because above the zero line. So I'll be looking for upside momentum, but we have none to go. Even if you drop down, I know a lot of people use the 15. I'm a 12-minute person, but we're going to go down to the 15-minute chart because I know there's a common time frame a lot of people use. So you see how I keep flipping backwards and forward, right? That is the chop. When you have choppy situations like that, you got to catch key reversals. Market gap down. Okay, cool. Recognize your bottoms here, right? Tweezer bottom setup. All right, great. Do. So you're coming down and run your fibs. Put your fib at the last swing low. Wait, 3. All right. So you want to do last swing low from where it came from to the low, right? So high, low, we in a downtrend. So we're going to start at the high, run it down to the low where it found support at. Cool. When they retrace, where did they come to? 78%, almost 88% retracement, filling the gap, rebalancing price. So from there, you're just watching it. Now, this 78, what that represent to you? Resistance. Because price haven't closed above it. They haven't taken out the 100% level. So you literally wait. Understand that you're going sideways. You haven't taken out the last swing high, and you're in a downtrend. Market structure gave you a downtrend, right? It's simple market structure because we keeping it simple today, right? So boom, 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 boom. This is where we currently at. They made a sharp turn, but they could not do it. So guess what? When they get up here and they doing all this fugaziness, playing around, we gonna short them. All right. So that's just a little wide out back out view so you can understand simple market structure. That's follow the trend. Don't fight it, follow the trend. And you understanding too is low momentum. So you don't want to waste a lot of time trying to think you're going to get a big move in this, right? You're not going to get a big move if your oscillators are not in the screen point. They're thin and out. All I'm going to reset to zero. Understand this. When it's low momentum in the market, all these oscillators like to retrace back to their neutral zone, which is zero, the zero level. They will retrace back and they'll go backwards and forward, which will simply give you false signals like the RSI and the Stochastic will give you a lot of false signals when it's low momentum. So you'll be trying to take these trades and you're getting chopped up. So these moves are not going to be all day. You cannot buy and hold all day long. You get you a quick 10, 20% if you catching them at an extreme point. So that's the reason why we threw the fields up here to say, hey, where can it potentially go? So let's act like price wasn't here yet. So the moment you drop that fib at the level of support, you say, man, price is no longer dropping. Let me hurry up and run my fib. It ain't going to take you that long. Drop down to, I use a 3-minute chart. You can use a 2-minute or a 1-minute, right? But just try to drop down to a 3 real quick. We don't want a crap load of candles for this example, right? So boom, straight up market structure, right? See the price, consolidate, drop. This is your retest. They cannot take that high. See them shorten up. You go short. It's already back at resistance. It been here before. They could not take it out. Even if you wasn't sure, everybody say, hey, there's nothing but a higher low. Okay, great. At this point here, right? At that point, you get ready. Because if it cannot take this previous high at this level here, let me make this stand out real quick. It could not get back above 506.85. All right. Now, once again, we're going to watch oscillators, right? Look what the oscillator did. It got here and capped out. So you're going to remember that. You're going to say, all right, this way got capped out last time. Why? Look what happens when they normally get here. If it gets to that level, typically price like to reverse. That's what a MACD is reversing at, right? From there, look at what happened here. It set it up. The highs on the MACD did not match, so that's a hidden bearish divergence, right? That's your little regular bearish divergence right there on the MACD from here to here. Mark that up for you. Bing. They did not match energy. You had a uptrend with the MACD going down. See that? So even price was rising, the MACD was dropping. And it called it on the squeeze too. You had your hidden bearish divergence here, then you had a regular bearish divergence here. All caught on the squeeze and in the MACD double confluence. You smoking that you got them, right? So as soon as you see that, because you're a patient, intelligent trader, you're gonna stay smooth, right? What my sticker said. Oh yeah. Boom. Yes, parachute coming out today. There we go. You're gonna jump out the boat. You're gonna jump out the plane on them real quick. Yeah. But you're gonna take it short. And then you're gonna ride it back down to where? To last level support. So you're gonna say, where do I exit at this moment, right? Because you don't want to get chopped up in all that other fugaziness. That's when using your market analysis, use your volume imbalances, you can use your order blocks, fair value gaps, all that good stuff come in handy, right? So from here, we already see this wick, it reacted to something. What did it react to? This 3 candlestick order block. Talked about that in the last couple of classes, right? Okay, make it easy to see. So you see the reaction? Right here is the candle. Boom. That 4 on the block. You see they reacted here before, right? So if they're gonna come back down here, my take profit is gonna be a little bit above this because I do not want to get caught in their reaction. Because they reacted like this one time, there's gonna be a retest of it. I don't want to see what's gonna happen here, right? So that's how you get jammed up. So you're gonna say, well, at 78, no, wrong one. This is how your trade should look. Stop loss there is at the last swing high. Stop loss at the last swing high. Take profit back at the OB. Boom, boom. Just like that. Nice cut, dry, simple, right? So you see it having trouble. You clearly seeing oscillators setting up the bearish divergence. Okay, you seen price starting to drop. Go ahead and get your weekly. Take it back down to the OB. You using small time frame market structure because you have low momentum inside the oscillators on a higher time frame. So understanding that, you do not look for a day trade. You're scalping. When there's no momentum in the oscillators, you're only scalping, taking it from one extreme to the next extreme. Once it hit that extreme point, you take it back in the other direction if you choose to. But I do not recommend doing all that in and out. I recommend you catch one extreme, enjoy your day, load the boat that you can, right? Tight stop losses, low risk. Boom. Get it how you live, call it a day because it can play around for the rest of the day. If not, it can go back in the opposite direction. So you have to be intelligent about that. Today, all right. Yeah, that's the difference, right? Is understanding your volume and momentum. If you do not have it, it's very important to know when you need to shift mindsets from a swing trader, a day trader, and then become a scalper. Or if that do not work with your personality or your skill set, do not participate in the market. Please do not participate in the market if you know you cannot switch hats. You can't take out the day trader hat and put on your scalping hat. Please do not participate. Now, if you're doing credit spreads, this was all day money, right? You can do your credit spread and play that low momentum, low volatility, and tear the game up like that. That is easy money. So you got to know when you need to switch up. Say, well, typically I like the day trade, but right now I'm not a good scalper, but I can do credit spreads. So you place a couple of credit spreads and you get it like that. Okay, so that's my breakdown of the SPY. I'm gonna get over into these other markets real quick, like because I want to touch on these other ones.
Neo, can you look at it on the 15-minute?
Oh, the SPY.
Yeah.
What up, Jay? Peace and
What's up,
blessings.
man?
Not much. All right, there we go.
Look at that where you got it topping out at. I figure it might top out at around 509, 510 for they drop it. March is typically red.
Yeah.
See that big gap?
You talking about this one? Oh, which one you going on with? So right now, let's go back out to we gotta go back out to the higher time frame. Cause we already gapped up. Nvidia made everything gap up. So now they're trying to pull it back down, but they try not to panic
Yeah.
nobody, right? So
Salesforce and Snowflake had terrible earnings, so it dropped it post market.
yeah, so we right here for as the gap went, right? We at 503 no, that's 505.38. That's what we currently sitting at. Now this all Nvidia fault right here, right? They
Yep.
jumped too high and not understanding that majority of the investors loaded the boat along with the Pelosi's in Nvidia. So everything was heavily weighted with those boys. They was controlling the market. Like literally, if you know, you didn't have to trade Nvidia. I actually traded AMD, anything associated with it. Nvidia drug everybody up. They'll say, that's why. You sit back
Yeah, I
and
was in some
enjoy.
QQQ calls when it ran.
Yeah. Like,
But I'm thinking that as I heard you talking about the types of trades, I'm thinking along I got some monthlies on the on spot because I think they're going at some point they're gonna bring it back down once everything settles and it looks like that 505 they're trying to
let's go.
be a
Got
new be a strong level.
Yeah, we gotta go drop down into the regular market real quick and I'll show you this. All right, since we got the standard hours. Now I got those additional candles, right? So right here, this is our fair value gap. So we have two gap to gaps, but this the one here. This candle right here is the one that displaced price, right? So this gave us our break of structure. They broke this rejection block here, but this I this the one that displaced price, right? So I know for sure this is gonna be an immediate target. This is gonna be target one. Boom, right there. So after they get that target one, they may bounce. I'm gonna look for them to kind of come down, probably like somewhere in here, then bounce up. They're gonna give us something next couple of days to key off of, and then I'm gonna look for them to come back down to rebalance this. Uh,
Yeah, we got that core PCI news coming. I think it's Friday.
yeah. So you also look at it. We had this nice little OB right here in the extended markets from here to here. Then with a pair with a fair value gap. So we got a fair value gap pair with an order block. That's a strong rejection. But they definitely gonna want to get this one because this the one that disrespected the last swing high. So this one got to get balanced first. We get some type of reaction, probably like a mid-level reaction, unless that news is something worthwhile dropping the market. Then they'll drop it down here and test somewhere in the zone. I'll be looking for at least 60% of this candle, or they'll test this OB and then go up. That's my market analysis. What else to do? Check the historical data on there, right? Okay. So, all right. You see anything else you want to see on this before I click over to the futures market?
No, you good? And I tapped in with futures this week, so that's why I'm on the call.
Already. All right. Let's run it. So, same thing with the futures market. I was going over this last night. I just marked this chart up for y'all, right? Same thing. We do the SOS on everything, everybody. SOS, everything. Weekly levels, simple math, right? We ain't doing nothing fancy here. There's no fancy tricks. Weekly levels, weekly high, weekly low, right? You got to keep it simple. This is the simple stuff right here, right? But this is get people hemmed up. Notice this is the Nasdaq 100. This is the one that moves like crazy. This is the one with the tech. The market is moving currently by tech. They carrying the boat. Nvidia is leveraging everybody at the current moment, right? But notice we still been inside. This is an inside market. Drop down to the 4-hour chart. inside market, right? This is the previous week high, previous week low. We still inside market. So this has been a very, very tight range. Very, very tight. Let me dig this. Got this little OB. I kind of tested that. Actually, two of them. All right. When it comes down to trading futures, the great thing about that, and let me go down to y'all 15 minutes. All right. You're going to have way more volume. You're going to have better shots at getting this done, right? See, the MACD is telling you, hey, everything is sideways, but we are in a bearish position. This is in the late hours. But let me go back to the 1 hour and get that same comparison. All right. So you see them low momentum spikes. Then this morning we had news, so that kind of drove the market down. But the histogram still in a low area. This still, to me, is very weak, especially getting opposite colors. Very, very weak. A lot of consolidation. Pay attention to your candles. See how they stacking up. See if your candles are actually escaping the zones. If they are not escaping the zones, then we are in trouble. You must pay attention to that. And if it's doing all those said things, you drop down and say, like, okay, what is my range? Mark out your range, right? What I prefer to do, this is a little trick I do. This is one of my little things I do for the NASDAQ. I go to a 12-minute chart. This is when you gotta have a 12-minute, right? All right, this is the previous day. So what I'm doing is this is what I'll be doing at night. This is what we did last night. I'm marking up the first opening candle, right? This is the Asian range. I want to understand what the Asian market is opening up, the high, the low, boom. Then from there, I'm gonna mark out the Asian low. This was the low last night, and we knew they dropped. So this morning, we come in. This is where the London sitting at, right? So we're gonna mark out that London market low. Oop, that's our Asian market low. We never put in an Asian market high, so that means we are making bearish progress. That's letting you know which way the market is leaning to, right? From there, you're gonna look and say, all right, cool. The previous night before, you're gonna go watch the charts and say, where is the market can potentially head to? Well, right here, I'll bet we got a volume imbalance. You want to highlight those. Those are great things. So you highlight your volume imbalances. Cool. Once you see this is the inducement, they bring it up. You had a nice little rejection block here. You see that opposite bullish candle versus the bearish candle? All right. Love these rejection blocks, right? But this one got violated after a while. So it's no longer useful at this point. So I'm just going to show y'all. See how they respected it? Boop, boop. This when your news start dropping, market open. They took market liquidity. This is where your liquidity was sitting at the low. They ran it. And boom. Came back up for this volume imbalance. They had to get up there. Once they got that bar to close inside, the volume imbalance is complete. Then we got the two candlestick order block rejection zone they created. Boom. They running lows. Okay. They're going to get that reaction because they had to rebalance another one of these, right? Got another volume imbalance here. So these are technicals you want to pay attention to, right? Won't tell too many boxes. So you start missing entries like this, you just simply wait for opportunities. The market will give it to you. Very basic. If you wasn't sure about that, well, guess what? You take a high from there, you can run it to low, right? And say, all right, this is my low. I'm gonna watch the market, let it do what it do every day. All right, great. So you would have ran from this swing to here to that low. That was your 61% retracement. Understanding your order blocks with your fibs, line those things up. You'll say, okay, here's my blocks. So I got a 50% retracement here. I got a rejection zone here. They ain't been there yet. I'm going to shoot my shot. Even to say this wasn't on the table, right? Or if it is, if it's not, you're going to say, man, I'm going to take this shot here. Stop loss can be, if you want to go extreme with it, you have to put it way up there. You can risk that 127 ticks. I don't recommend it. I wouldn't do it. That's a lot of money to risk, right? But you know, you know. All right, say, man, at the top of the block, it is 72 ticks. Still, that's a lot of money to risk. I'm not going to run it because you're going to target the last swing low. Always target your previous low. But you want to stop right before the low, not at the low, right before it. And you know they're going to run it, but you want to get off the boat early. Okay? Early. If not, see these wicks? Those are people who say, oh, man, we got it. And then they do this to you. They run. They hit your stop loss because they know people who took this trade, they are greedy. They stop loss was still here, right? So the people who fell asleep at the wheel, they stop loss got ran as they came back for this volume imbalance. Reason why they didn't get this one the first go because they had to get some buyers. They had to get some people to believe in the move, right? They had to say, yo, we got to short the market, but it's not enough money because they already dropped it. It was not enough of a discount. The NQ liked the discount at the 61%, never the 50. It'll turn at the 50, but they do not like discount at the 50. They like a 61% or greater discount on the NASDAQ. The ES, 50%, they cool. Those are reasonable people over there. The NASDAQ, these people ain't that reasonable. They kind of ruthless. They penny pinchers. They very frugal over here at the NASDAQ. They want 60% of nothing. So they're going to trick you and say, hey, we're going to drop it here. You see the market going down, you take it. Well, they got the first set of you guys out. Let's clean this up. Boom. They got the first set of guys out right here on this reversal. Bring it back. So you put your stop loss at the last swing high here, cheated yourself, right? They took you out there on this very couple of candles later. Then they dropped it again to run these lows, right? Say they took the lows. Boop. So you pay attention to things like this. So when they run them lows, guess what? They did a break of structure, understanding like, all right, that's off the block now. If they go back up, they come for a volume imbalance. They ain't hit that yet. So guess what I'm gonna do? I'm gonna look for some signs of reversals, right? I'm looking at how things are building up. My MACD is not coming down. That thing found support, right? So these are little telltales that you got to understand with your oscillators. See how that thing found support? And I had a massive market drop. It took the lows and it did not match energy like this. Come on now. So you got to stay woke. Look at that. If it did not match energy like it did with this one and is running lows, that means some fugaziness is about to happen. This is, look at my left hand while I still front you with my right hand. This the sleight of hand right here. See this level? This is what you want to see. Not this, because they had that bullish regular divergence coming to slap you in the face and take your bread. Okay. They took your cheese right off the cracker real quick. Boom. Gotcha, coach. So from there, they ran up, came back to the zone where they wanted to go in the first place, but they needed buyers. They had to drop it down. Minshew, we going long for the day. You fell for it. You went long, fell asleep at the wheel. They got where they needed to go, instantly took this out. When you see a candle like this get taken out, this is the real key here. This is how you know when things are going bad. You shouldn't go with them. So you see this engulfing candle. Let's get rid of this box here. Once you see this nice bullish candle here, followed by a bearish candle, see what happened here? Completely taking it out. And you inside of a zone. Do not fall asleep at the wheel. They are probably going to short the market. They are not going to play with you. They're going to short it. As soon as you see that, if you're scared to take this screen candle here, because the higher you take it, the cheaper it is for you. So you can actually have an order waiting at the bottom of that candle, right? Stop loss here. Oh, you can say, all right, 69 ticks. Well, let me take it to the close. They shouldn't break the close, right? 62 to the high. That's your risk, right? Or I can simply wait for the next candle to open up and see how it's dropping. You say, well, I'm going to put 56 ticks to the high. Let me shoot my shot real quick. Let me get in there. Or you can wait for this candle to open up, open below that one, short it. You take it because it's open here, right? So the moment this thing open up, you see it pull up, Then start coming down and flips. Get in that thing. Get in that thing. I'm trying to tell you, getting in at the top is way cheaper than trying to get in down here. Because the longer you wait, the more money it's gonna cost. You wait till that candle, that's 106 tick stop loss. Okay. So you do the math on that. You know the ticks, do the math. You don't know the ticks, well, we can teach you. But the longer you wait, the more money it costs. Your stop loss needs to be above market structure to actually be safe. That's 117 ticks. That's a lot of money once again. So the faster you get in at the screen point, the cheaper it costs you. If you're not afraid, but that takes experience and time. Use your confluence to see this is where the market topping out at. That is a reversal candle, top of a downtrend. Come on now. Remember, we are in a downtrend. Simple. Simple. On that tip, do we have any questions?
I was wanting to ask you about the way you drew your fib. Um, Let me see. I can hardly see it, but it doesn't look like you drew it all the way up to the top. You started it all the way up
Oh.
to the top.
So I took it from the Asian open high from here because it's the
Oh,
ballpark. If I change it and say if I decide to say, all right, if I want to come over here, I'm not gonna. All I'm gonna do is just slightly move them up different. It's just gonna change the calculations. But what I'm paying attention to is the zone of operations. Right, I'm operating in this zone market structure here from point A to point B. So I wanted the information from here. Now, if I start sliding it over and higher and stuff like that, they're gonna change the calculations of the Fibonacci, and from there they'll start giving me different information. So I like to
right.
focus. So since I'm day trading and scalping this, I only want a set amount of information to focus in on, so I can take those opportunities.
Okay, so that was the Asian high. Is that what you're saying?
Yes, the Asian opening high.
Okay, okay. I was just wondering why you drew it like that. So, okay,
Yeah, no problem. So, because
all right.
here's the thing, right? The futures market runs 23/6, 23 hours a day, 6 days a week. So when this Asian market open, technically this is a new day, right? So this
Yeah.
is Wednesday. This is Thursday. In Asia, this is Thursday. So you go to the daily chart, you'll be like, oh, this says why this says Wednesday, and then this one gonna say Thursday. They'll be saying different things because that's how the market opens up. So most people understand the true day open, right? The true day open or the true week open is on Tuesday. The true day open is at 6 p.m. Eastern Standard Time, and that is the first candle. And you'll say, what's the open? Since it's a bearish candle, that means it opened up here. So this is the true day open. Or some people put TDO, right? So it's a true price open here. Once you see price close below the true day open, you know, most people say, hey, there's going to be a bearish trend. If it fell in the close above the high, it'll be a bearish trend.
Okay. Okay. Thank you.
Ain't no problem. So you just want to pay attention to the area you're going to be working at. Because you start throwing it
Okay.
too far, then you're going to be waiting for a deeper retracement. So let's run that theory, right? We got some time. So let's say we want to run the field from the weekly high to its low. Boom. Now, you see the difference in information? We're gonna say, oh man, it only made a 23% retracement. Well, it ain't discounted yet. The discount is 50%. It never came back up to 50%. You waiting for the trade, you miss it. You see what I mean?
Yeah. Thank you.
No problem. So probably like da 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 ba ba. Don't it's Wednesday. Typically by Wednesday, the market should have ran a high for the new week high or a new week low end. It didn't do neither one of those yet. So we got 2 more days of actual trading, which is Thursday, Friday. I'm not sure they're gonna get it done. I think it's gonna be an inside bar. Or gonna unless something jump off and they decide to dump the market, they want to be in an inside bar. I think we're gonna close as inside. So let's look at the weekly real quick. Yeah, it's an ugly one too. So it's definitely inside bar. Since it's somewhat a position at the top, it could be considered a bearish harami, and that could drop for next week. They could be setting us up for a little drop. See, it's only 1 day and 22 hours left. We know it's 2 days, but that's how the math breaks down. I don't make this up. This is day math. Right. Any other questions? What we got?
Hey, Neil, did you already go over the oscillators that you were using? I missed the first part.
Oh, yes, the oscillators that I use. So I use the squeeze and the swing and the MACD. These are my oscillators. So my MACD is set different from the standard MACD. Mine is 539.5. Those are my numbers. So y'all want to get a screenshot of that. This also recorded, by the way. So if y'all need to go back, I'm gonna be posting it to my channel, my YouTube channel, so I can go back and rewatch these videos. And as soon as it's ready, I have it uploaded. But yeah, so these are my numbers here for my oscillators. But yeah, MACD, squeeze and a swing. Those are the only ones I'll use. Any questions about that?
So I'm trying to wrap my head around it, and it's like a foreign language to me. Can you explain how the MACD works, that line that you were talking about, the zero line, and then the CC swing? Because it looks like you're using them both together to
Yes.
understand the volume of the market. And for whatever reason, my head, I can't wrap it around that.
Okay, cool. No problem. So this is the zero, this white line here. That's the reason why I highlighted it in settings. So you just simply go to settings, see a zero line, turn it white, set to zero. So this is the neutral zone on the market. Depends on which side these blue and orange lines, or the K2 lines, right, are positioned. That tells you it's in a bull side of the market or the bear side of the market. If it's below the zero line, you're in the bear side of the market. So you'll be looking for more bearish trades. You'll be looking for all downside trades because this is more bear heavy, right? Now, how you determine the momentum is by the size of these histograms and how these K2 lines spread apart. So the farther they're apart, the more momentum going in one said direction, measuring time and price, right? But when these histograms and these lines are very wind tight together, that means it's low momentum, and the market 910 going to go sideways or shift. So let's go back out to a hour chart and you'll see what I mean. So you see how you got these random skittish bars, right? They look very weak here. That's telling you it's low momentum in the market. When it's high momentum in the market, you got bars like this. See the difference?
Yep, yep.
So that's what you pay attention to. So when you come into the market on a day-to-day basis, you want to see like, hey, what is the higher time frame oscillators telling me? Is it more momentum in the market or is no momentum in the market? If it is, then guess what? I need to make sure I'm on this side of the market. Like this day was the 21st, right? Guess what? It was in the bull side of the market and we had momentum on a 1 hour chart. So 1 hour, 4 hour chart is telling you have momentum. All right, when I drop down to the lower time frames, I just need to wait for the opposite trade, the trend to get in on this trade to the upside, right? That's why I'm going to wait on a pullback and get it how I live. So let's actually highlight this moment here and we'll look at the chart all together real quick. Oop. So you see this day, you see the size of those candles? That's how you know you got volume in it. But when the candles are tiny like that, there's no volume, low momentum. You see this when they start tapering off about this time, 1 o'clock, 2 o'clock, 3, 4, 5, blah, blah, blah. Right? But this right at the New York close, Asian Open. This is where all your momentum was sitting at. After that, everything went out pretty much, right? Now let's go into the squeeze and the swing. So the squeeze and the swing, same thing. It shows momentum by is opening up. You see this little crosses right here. This is the zero level, right? Above bullish, below bearish. When this thing is opening up wide like this, that's telling you it's high momentum in one said direction. Same thing with the squeeze. When you got the histogram down into the green and red bands, it's telling you there's high momentum to the bull or the bear side. This little line here, this is my Hall 20 I had incorporated into the squeeze. So that gives me the reversal points. These are your histograms. So you see how they starting to come off of the Hall right here?
Mm-hmm.
How like that. So that's telling me momentum is shifting sides. So it's going from the bear side, starting to shift up into the bull side of the market. And then there you go. So that's how you read those. It's simply saying like, hey, if it's going strong in this said direction, and I start getting some little price action, because this squeeze also teaches you like to recognize the divergence is coming up, right? So you see how far down this histogram level is versus this one. They stop. It even plotted out for you, right? It said, nah, we ain't really doing too well. We didn't go as deep as we did last time. Guess what? Now you're starting to see, hey, it's starting to separate from the hall and starting to pull up. That means I'm at support. I need to find an entry, or I just need to catch the breakout trade, whichever way you want to, take that trade.
Got it. And these are laying indicators, is that correct?
Oscillators, they're assistants. Indicator sits on the chart. Oscillator sits off the chart. You know what I'm saying?
I think so. I'm gonna
All right.
rewatch this so it sticks
So
in. Good.
So check. So moving average. So you see the cheat code algo, right? It's an indicator because it lays on the chart. This is the chart. This is off the chart. So that's the reason why it says, hey, when I click this, it says move to a new pane and stuff like that, or whatever. When it says where this thing at. Yeah, here you go. It said move to existing pane above, then they'll be putting it on the chart. But since they off, that's the reason why they oscillators, because they reading different things. Indicators are, yes, majority indicators are lagging. The MACD is a lagging indicator. EMAs are lagging indicators. Stochastic RSIs are lagging indicators, right? That's the only thing. That's why it's very important to learn price action, because that's what don't lag. Now, the algo itself is a live indicator. It actually reads in real time. That's why it changes. The signals come and go. You see different things and it reads it and it'll change colors and all that little fancy stuff because it's live. But the rest of this stuff, lagging. That's FYI. Yes,
Perfect. Thank you.
that's right. No problem. No problem at all. Hey, yo, any last minute questions? Any more? Do we have any more?
So all the indicators on the algo are live, including their
So you're
EMA.
gonna have the oscillators, the squeeze and the swing gonna lag. The algo itself is live, but the swing and the squeeze gonna lag. You do need a little bit of lag in indicators. They're not a bad thing because they telling you certain information. You don't need them to react right away, right? Because you need that extra confluence. Sometimes a little patience can save you a lot of money. But algo itself is a live indicator. The squeeze and the swing, they do lag, which is good because you don't want to speed that up. You speed that up and then you start getting false signals. That's why you use a stochastic. You'll be like, oh man, I didn't mean to get in that short position. It just flipped down because it's too fast, right? It's not fast enough where it's like ahead of price, but that slight little twitch when price want to do something that can trick you into the wrong position at the wrong time. So a little bit of lag is not of a problem. Just understand where you at on the chart, understand what price action is actually doing and what they're trying to do. Once you understand the tricks of the trade, you can actually predict what's gonna happen. So you know for sure you're coming up to an OB, you're like, okay, great. It should reverse here. Well, how do I know it's gonna reverse? Right? You gotta say, what is my oscillators doing? Like matter of fact, I'll show you. Do, do, do. So I see how price flip right here, right? Oh, okay, great. You see how we had this volume imbalance right there. Okay. Boom. So you'll say, like, how would you know to go long here? Well, look, your oscillator is coming down and in a bullish position, correct? We're on a 1 hour chart. So the 4 hour, go back to this. Just real quick. Boom, boom, boom. Is doing what? Your 4 hour still in a bullish position. Your swing still in a bullish position. Your squeeze still in a bullish position. So you're in bullish territory. But this is a 1 hour volume imbalance, right? So it's gonna take a while for them to actually turn that boat. So you can turn a car on a dime, but when it come down to a cruise ship, it may take a little bit. So just give it a little bit of patience. So we come back down this 1 hour, and you see price dropping, boom, stop. This engulfing candle, no follow through, right? Sideways, sideways. Like, man, that thing gonna drop, man. Did you see how hard it dropped? It's gonna drop. No, it's not. No, it's not. They came back for this volume imbalance. Watch what they're doing. Your oscillators all in bullish territory, and you see what the MACD is doing, right? It's skimming. You see how it just starts skimming and things start losing weight? Boy, like they ain't paid their bills in a while, boy. You know, they start losing weight. Stress. Then it came right back up on you. Boop. So you had this. Then start getting a little fugazi. They act like they was gonna retest the low, but they didn't. They did not retest the low, and they went up. That's how you know. Your 4 hour chart was still in bullish territory. Your 1 hour chart was just coming back down to find support to reset because they have to reset these oscillators. When they go into one extreme point, they got to bring it back down to the 0 level. Sometimes flirt with the bearish side, but they're gonna just get over there, hang out for a little bit, and then boom, continuation until they can actually drop it. They gotta drop it down in stages. They just can't drop it. They have to come up a little bit, give everybody a fair shot to play ball, then they drop it back down. That's how that goes. So we don't get mass panic. Okay. So yeah. Hope that the explanation helped you. All right. Any other questions? Last call.
Hi, I was wondering, can you help me with market structure? I guess it's just
Mhm.
to determining, because like if I see it's going downtrend, then I ask
Mhm.
myself like, is it going back up for a pullback or does it, I don't know. It's like confusing when I get to that area, if that makes sense.
Oh yeah, I got you. All right. So what you want to do is understanding breaker structure, and that'll help you out with that market structure, right? To say, all right, if it's pulling, so you in a downtrend, you want to know if it's going to pull back up and go back up, correct?
Exactly.
All right, great. So here, since we got the algo, it's actually going to give you little cheats, right? You see where it says change of character here? Boom. So you see we had came down, right? Made a base. Price went up, took out the high, right? So this was your last, since we was in an uptrend, right? So this was your higher high. When it came down, this was your higher low. When they took out this higher high, this became the new higher high, right? So when they
Yeah.
came back down, they should never took out this low. The moment they took this low out, that became a problem, right? So what you're gonna do is you're gonna find price. You're gonna say, all right, where did you go, buddy? And you're gonna say, okay, cool. This potentially gonna be a lower low, depends on what the reject do, right? So the moment they pull price back up, you see they failed to come back and retest this high now, right?
Yeah.
Okay, great. Now this became your higher low, your lower high, I mean. So that was the shift. So once they broke structure, was here, right? Because that was the last level of support. It was a minor level, but that was market structure. That was your higher low. When they made a new high, higher high, guess what? They took out the higher low. They should never done that. If the price is going to continue, they should not take out the previous lows. They can test the lows, but they should not take out the lows. That's how you know they're making progress in the opposite direction. You got that? Or you need me to keep explaining?
I got that. Price can retest the lows, but not take out the lows. So it's important to
Yes.
mark the lows at each of the market
That's the
structure,
mark.
because then you'll know where it's going.
Yes.
Thank you.
So no problem. So you see how when they came back, right? When they put in this lower high, guess what they did? They took out the previous lower low, which is great. That means we making bearish progress. So this is my new lower low. And when they bounce back up, guess what they didn't do? Take out this lower high, correct? So this is my new lower high. So now, guess what? They retested it and they kept it in the zone. Okay, great. They finally broke it. We got a lower low. And this is my new lower high. See how that works? Then they broke it again. So guess what? This is my new lower low. And this is my new lower high. Until they take out one of those and displace price, this market is going down to me. If they take this out, then I'll be like, okay, where are you going? You're looking for market liquidity. You're looking to rebalance price. Now I'm asking myself key questions here, right? But this still is kind of like internal price action when you need to have major external price action. So here was an external level. Why? Because you see all this internal movement, and then they finally broke it here, right?
Yeah.
And then they came back up and dropped down. So that's why you got these little small little BOSs, break of structure, because these internals. When you had this nice solid one, these to represent the external. So when they done all of that, that's when they start shifting the market slowly downwards, right? But those are the keys you pay attention to. Is like how they acting with the internal structure and the external structure. Like, okay, cool, you done this. Okay, well, maybe this coming for something. It could have been a news event. Understanding like time and place. Like, what time of the day did you really run that low? And then when you started to reject, where are you stopping at? If you're kind of hesitant about what you should do, just wait. Let price show you what it's going to do. Do not try to predict what it's going to do. Let it show you what it's going to do, and you go with the flow. Never think you are going to outsmart price and you're going to know what things actually do. Nobody got a crystal ball. I don't care what they advertise on Instagram. Nobody has a crystal ball. You let price show you what they're going to do. Once they tell you like, hey, we doing this. Okay, great. Then boom. You go with the flow.
Thank you. I got it now.
Ain't no problem. Ain't no problem. All right. And on that tip, people, peace and blessings. We're gonna call that a night right there. Let me stop the recording real quick. Okay.